I'm joined by Ronnie Chopra. He's the Chief Market Strategist at FIXI Markets. That's F-I-X-I. I hadn't heard of them either. Morning to you, Ronnie. Happy New Year to you and your family.
That's quite an introduction.
I just haven't heard. Who are FIXI Markets?
Well, they're a relatively new firm in
Right.
the city dealing with foreign exchange and equities.
Understood. Right, 3 slides. Anyone watching for the first time, you're almost a contrarian thinker, I think. You mix up the fundamentals, a little bit of technicals, and invariably you're looking for value.
That's true.
Is that fair? Good. Okay, let's kick off with the first slide. Deutsche Bank. I remember somebody came on in 2016 suggesting that we should be selling Deutsche Bank at €10, and they rang the bell for the bottom. What are your thoughts there?
I think they're a great recovery story. They've obviously been hit very hard over the years by the US courts, where they've been fined billions of dollars, and that's obviously taken a knock to the shares. But at one time, these were the largest bank in the world, and I think they've got a lot of deadwood to get rid of. There's talk of massive job reductions and making the bank far more efficient. John Cryer became CEO back in early 2017, just over a year ago, and he's got quite a task to do because this bank has really underperformed against the US peers. The shares have picked up a little bit since September from around 13.50 to the current price of just above €15. But these were trading as high as 80 or 90 euros back in the day. So, I mean, they've obviously got a big name. They're the biggest German bank. And if John Cryer doesn't get his act together, he'll be out. There are predators possibly lurking. There's talk of a breakup bid for the bank. And yeah, I see a lot of value in these. If Cryer doesn't get his act together, as I say, he'll be out, and there'll be predators surrounding the company. Okay,
let's move on to a currency. The Great British Pound against the US dollar. I'll give you credit. You called up to 140 in sort of Q3, Q4, and we weren't that far off, where the technical analysts were saying sell, sell, sell at 120 and lower. What are your latest thoughts?
Well, yeah, I mean, like, the pound has picked up somewhat over 2017. I think the 140 level is quite a critical barrier. If it crosses 140, then I can see it going to 150 fairly soon, because just technically, when Brexit occurred, there was that massive fall, as you probably remember, on June the 23rd, when it went down from 150 late on the 22nd down to, the mid-130s. So there's that gap to fill. 140 is a critical level. I can see it picking up to 140. There's a lot of dollar weakness out there. The dollar was one of the weakest currencies last year, especially against the euro. And just from a PPP point of view, purchasing power parity viewpoint, I still see a lot of value in the pound, not just against the US dollar, but also against the euro.
Well, I know for sure that the hedges are coming in on the bull on the Great British Pound in Q1. And secondly, in terms of the sort of, I know these people who predict a year out, okay, everyone sort of laughs at it, but I see some pundits are calling it 150 for year end.
Yeah, but those same pundits were calling it at parity last year. So I don't really, I take all that with a pinch of salt, as you know.
As I well know.
And so, yeah, I can see 140 coming.
Right.
But obviously a lot does depend on these Brexit talks. Everything seems to be fairly okay on track. If we get a pleasant surprise, it'll obviously push the pound far higher. But if there are some knockbacks, then we'll go back below 130. But I don't see us going towards 120. There's far too much value in the UK for it to go to 120.
Okay, well, let's wrap up with your final slide today. Marks & Spencer's my favourite retailer. What are your thoughts here ahead of the numbers?
We've had good numbers out this morning from Morrison's, haven't we? I mean, this is obviously a clothes and food retailer, but it has a fairly large percentage of its profits now in food. And I think all those food retailers are priced at a very low level. Let's take Marks & Spencer's, for example. When I was 10 years old, 35 years ago approximately, Marks & Spencer was £6 a share. Now tell me one other product you can buy that's pretty much half price from 35 years ago. I can't think of many.
Okay, that's good.
Maybe a television.
Right. So
But
would you go long into the numbers?
yes, I think so. I mean, there's a lot of bad news already factored into the share price. Around the £3 level is pretty much the nadir, the low point. And at current levels of, I think this morning it was around 317, 318. It was up 2 or 3% from yesterday's closing price. So there's a bit of upward momentum in these into the trading statement. Obviously, it's risky. I mean, they could come out with results that are worse, that their trading statement could be worse than expected, but I can't see them falling much below £3, and I can see them going back up to £4 over the next 12 months or so. But again, with Marks and Spencers, if somebody doesn't see value, if they don't get their act together again, similar to Deutsche Bank, then these are, they've been bid for before. So, and they were bid for at far higher prices than the current price. Yep. And then take into consideration that the pound is far weaker than it used to be. So for a foreign predator, this company still has a massive name globally, and the market cap is just over £5 billion, what Bezos makes every day pretty much. So someone like Bezos could pick this up for even a 30-40% premium. It's chicken feed for him. Also at the moment on fundamentals, these are on a P of 10, 11, dividend yield nearly 6%. It's incredible. As a value play, they own so much property, their freehold property, the building in Marble Arch, how much is that worth? On top of that, you've got new management, Archie Norman, who turned around Asda. When he came into Asda, they were 30 pence a share back in the early, 2000? Or no, in the 90s. And when he came out, he sold to Walmart at £2 a share. So you've got good management in place. You've got the shares languishing at pretty much multi-year low levels. There's value, okay? And at the current price, I don't see much downside,
Ronnie,
even if the trading statement is poor.
Understood. We've run out of time. Thank you very much indeed.